Are you thinking about making a Bitcoin investment? Although Bitcoin is probably the most well-known digital currency, there are currently thousands of other cryptocurrencies. Investing in cryptocurrencies can take many different forms, from buying them directly to buying into cryptocurrency funds and businesses. You can purchase cryptocurrency directly by investing in them through a cryptocurrency exchange or through some broker deals. Learn more about investing in one of the newest and most innovative asset types currently accessible. Welcome to Good Lucks, a channel dedicated to inspiring you to expand your mindset, make general life breakthroughs, and realize your full potential to see what life has to offer. Finding out how to purchase Bitcoin, Dogecoin, Ethereum, and other cryptocurrencies can be challenging at first if you're new to the world of cryptocurrency. Thankfully, learning the ropes is not too difficult. For years, seasoned traders have speculated on cryptocurrencies, but what if you're new to the industry and want in? You may learn how to start investing in cryptocurrencies and how to avoid this, and what to avoid in this video. Let's get started. Check those boxes before investing. Know the investment you're making. Know exactly what you're investing in, just like you would with any other investment type. When purchasing stocks, it's crucial to carefully research the companies and read the prospectus. Plan to follow the same procedure for all cryptocurrencies, as there are literally thousands of them, each of which operates differently, and more are being produced daily. For each trade, you must comprehend the investment case. Many cryptocurrencies have no backing whatsoever, neither in terms of physical assets nor monetary flow. For instance, in the case of Bitcoin, investors solely rely on someone else paying more for the product than they did. In other words, many crypto assets depend on the market turning more positive and bullish for you to earn, unlike stocks where a firm can increase its profits and drive returns for you that way. Recall that the past is the past. Many novice investors make the error of projecting previous results to the future. Yes, Bitcoin was once worth pennies, but it is now considerably higher in value. The crucial query, though, is will that growth continue in the future, even if it's not exactly at that precipitous rate? Investors don't consider an asset's past performance. They instead focus on the future. What will fuel upcoming returns? Investors in cryptocurrencies now require future gains, not those from yesterday. Observe the volatility. The most volatile asset prices are those of cryptocurrency. They might disappear in a matter of seconds based solely on an unfounded rumor. That can be wonderful for experienced investors who can quickly execute transactions or who have a firm understanding of the market's fundamentals, its current trend, and its potential future directions. It's a minefield for novice investors without these abilities or sophisticated algorithms that guide these deals. High-powered Wall Street traders play a game of outgunning other wealthy investors in the volatility market. The volatility might quickly overwhelm a novice investor. This is because volatility frightens traders, especially newcomers, and shakes them out. Other traders might enter the picture at a discount. In other words, whereas novice investors buy high and sell low, expert traders can buy low and sell high. Control your risk. Risk management is important when trading any asset on a short-term basis, but it can be particularly important when dealing with volatile assets like cryptocurrencies. Therefore, as a more inexperienced trader, you'll need to comprehend the best ways to manage risk and create a procedure that aids in loss mitigation. The simplest form of risk management for a long-term investor may be to never sell, regardless of price. The investor can maintain the position thanks to their long-term outlook. However, a short-term trader may control risk by establishing rigorous guidelines for when to sell, such as after a 10% decline in investment. The trader then slavishly adheres to the guideline to prevent a very little fall from later turning into a devastating loss. Risk management is crucial, but doing so will cost you emotionally. Although selling a losing position stings, doing so can prevent further losses that are more severe. Don't risk more than you can afford to lose by investing. Finally, it's crucial to refrain from investing money you need in speculative assets. You shouldn't invest in hazardous assets like cryptocurrencies or other market-based assets like equities or exchange-traded funds if you can't afford to lose it all. Money that you will require in the next few years, whether it be for down payment on a home or a significant forthcoming purchase, should be maintained in safe accounts so that it is there when you need it. And your greatest choice, if you're seeking a 100% return on investment, is to pay off debt. Regardless of the interest rate you pay on the debt, you are certain to make or save money. There is no loss there. Last but not least, pay attention to the security of any exchange or broker you use. Even while you may legally be the owner of the asset, someone must still keep them secure, and that security must be tight. Some traders decide to invest in a crypto wallet to store their coins offline, so they are inaccessible to hackers, or others if they don't believe their cryptocurrency is securely secured. How to buy cryptocurrencies? Decide on an exchange. Selecting a trustworthy exchange is your first step when making a cryptocurrency investment. You'll be buying, selling, and probably storing your cryptocurrency on an exchange. Fortunately, cryptocurrency has been around long enough for the largest exchanges to develop a solid user base. Although there are numerous that we generally advise, here are the top 3 exchanges for beginners. One of the most well-known cryptocurrency exchanges in the world is crypto.com, which supports a large number of cryptocurrencies and a strong staking program. The majority of newcomers should start at Coinbase. They are a publicly traded firm with over 73 million members, which is renowned for its excellent and intuitive user experience and offers Coinbase Learn as a way to earn free cryptocurrency. High fees and the inability to retrieve your private key from a cold wallet are drawbacks. Pick the cryptocurrency you want to invest in. There are other digital currencies than Bitcoin. In actuality, there are over 7,500 different types of cryptos. Fortunately, the majority of exchanges only provide a few dozen. These coins often have the highest market caps and are the most reliable and viable. The top trading cryptocurrencies currently include some of the following. The king of cryptocurrencies, Bitcoin, is still around and accessible for purchase on all major exchanges. By enabling the recording of smart contracts to the blockchain, Ethereum, the second most popular cryptocurrency by market cap, has become successful. Which should you choose? Since cryptocurrencies are so speculative and unpredictable, picking the best ones for your portfolio may simply depend on your personal beliefs. Do you believe, for instance, that Ethereum has more technical merit and practical uses than Bitcoin? Keep your private keys safely in a wallet. The next choice you must make after purchasing cryptocurrency is where to store your private keys. To briefly review, hot wallets exist online, while cold wallets exist offline. You can easily access and trade your cryptocurrency with a hot wallet, and the security mechanisms guarding it are greater than ever. But since hackers are becoming more daring, some cryptocurrency traders, especially long-term holders, opt to store their private keys in a cold wallet, which is a USB or hard disk they put in a safe place. A hot wallet will suffice for the time being if you're only dabbling and anticipate continuing to purchase little sums regularly. As a storage choice, you can also consider Bitcoin savings accounts that offer interest on your holdings. Invest in stocks and ETFs of cryptocurrencies. Need to invest in cryptocurrency but don't want to buy it? You're fortunate. You can learn more about the SEC's recent approval of the first Bitcoin futures ETF in our article, Crypto ETFs: How to Invest in a Bitcoin ETF. By purchasing shares of businesses that are significantly invested in or focused on the future of cryptocurrencies, you can also invest in the cryptocurrency market. For instance, you can purchase shares in Coinbase, mining businesses like Hut 8 Mining, or chip manufacturers like Nvidia that indirectly support cryptocurrencies by making mining chips. Before making an investment in cryptocurrencies or certain businesses that have a significant stake in them, like with any investment, be careful to take into account your investment objectives and present financial status. A single tweet can cause the price of a cryptocurrency to crash, and investing in it is still incredibly speculative. This suggests that you should invest cautiously and carefully. It has never been simpler to purchase and invest in cryptocurrencies. In many ways, crypto is still the Wild West. Regulatory control is lacking in this frantic gold rush, but that may soon change thanks to President Biden's crypto executive order. If you decide to invest in cryptocurrencies, make sure to educate yourself on the risks, recommended procedures, and industry developments. Don't forget to pay your taxes to Uncle Sam as well. Post any more questions or comments in the comments area. If you liked the video, hit the like and subscribe buttons so that others can see it and be inspired. Enable the notification bell as well to make sure you don't miss any new videos about personal growth. Thanks for watching, I'll see you next time.